The Standard Deviations podcast is a weekly production that looks at money, mind, and meaning, all through a psychological lens. Each week, psychologist and New York Times bestselling author Dr. Daniel Crosby interviews a fascinating new guest, experts in everything from finance to literature to wellness.
When was the last time you splurged on something when you knew it probably conflicted with one of your financial goals, like paying down debt or saving for future fun in retirement? Well, if you do this, you're not alone. It's because of present bias, or to use the psychobabble term, hyperbolic discounting. As humans, we have a tendency to let the immediate rewards of the here and now win out over a desired future reality. To learn more, check out the Cash Stash Dash, a planning tool brought to you by the Guardian Network to see just how much your short-term spends might be impacting your longer-term financial goals. Play today by visiting www.livingconfidently.com/play. Hello and welcome to the Standard Deviations podcast. I'm your host, Dr. Daniel Crosby. I'm joined today by two special guests for the first time in the history of the podcast. We have not one, but two guests. We have Lynsey Freeman and Kelly Ng from WestPac Wealth Partners, who are here to talk with us about how women can forge a path in the world of high finance. Welcome to you both.
Thank you. Hi, everyone.
Thank you. It's an honor to be invited. I've been an avid listener of your show for quite a while, so thank you for having us.
My pleasure. And now, Kelly, you are in Hawaii. We got to spend a moment on this. You took a birthday trip that turned into a 3-hour cruise, so to speak, that never ended. You took a birthday trip and never came back?
Yes, I'm, as of now, just here indefinitely. It's been really nice. We have an office out here. And I've just been working out of the apartment that I got a short lease for. And I'm looking to extend and go to another apartment, hopefully. I'm just trying to hide out from the mainland while things are so crazy out there.
Well, if you got to get stuck, you might as well get stuck in paradise. I have a buddy whose parents, they're from the States, and his parents have been stuck in like this beautiful resort town in Spain since March. And they're like, yeah, we're all set. Like, we never want to come back. This is great. So if you're going to get stuck somewhere beautiful. So Kelly, I'm going to start with you. We're going to talk today about women in finance. And we know that women are underrepresented in finance, but as I'll share throughout our conversation today, there's a lot just from a data standpoint to recommend women as some of the most fair-minded and exceptional investors and professionals around. So do you think being a woman makes you uniquely positioned to succeed in this career? Yes or no?
I definitely think so. Yes.
What is it that positions you so nicely, you think?
So I think it's a real generalization. However, I think it really is true that women are much more relationship oriented and really think about long-term planning. They have goals and they want to hit those goals. And they really are working toward making that goal happen. So at our firm, we focus on comprehensive financial planning at WestPac Wealth Partners. And not only do we want to invest and grow your assets, I love investments and I love growing assets, we also really want to protect your assets. So because it's a long-term relationship that we really hope to have with our clients, I really do think that we as women are positioned really, really well. Also, this may sound a little funny, but we also live longer. So if you want, in general, that is a statistic. So if you want to have a longer-term relationship with a financial advisor, I would say choose a woman.
Okay, that one hurt a little bit. I got to be honest. That one hurt a little bit. This is something, it's something I discuss with my wife, and it's something that I think creates a unique dynamic between advisors and their clients, and certainly between men and women who are partnered, is that, yes, on average, men marry women who are 3 years younger than them that's the national average, right? Your mileage may vary, but on average, men marry women who are 3 years younger than them. And on average, women live about 10 years longer than men. So, I mean, it makes for an interesting, decade or so. And it accounts for so much of the wealth transfer that has gone to women and will continue to go to women. And, these things are always tricky because, of course, we have to speak in generalities a bit. But I do think, and the research suggests, that women are more relationally focused than men on average. And this is a relationship business. And it's only once we can deeply understand someone's relational context and what they care about and what they value that we can suggest the right mix of investments and protection for that person. So I think you're on to something. Now, Lynsey, of course, no conversation with me would be complete without giving sort of a nod to the behavioral perspectives. And when it comes to the behavioral finance of investing, women are the best around. We know that they save more. We know that they generate higher returns on average in both professional and retail contexts. They're less likely to do dramatic things like go all the cash. Research shows that they do more research before making an investment, and they're actually more skilled at weighing probability than men. Their weightings of probability are more on point than men's are on average. So what sense do you make of this? What are some of the factors that account for this outperformance? There's not a single place that I can find where men outperform women in an investment context. And I'm curious what sense you make of that, Lynsey.
Yeah, I think that's a really awesome point, and definitely a lot of points that women should be proud of. And I think, some of the factors that, are due to this is I think it's more of the natural characteristics that women have, like things we're born with. I think so much of successful investing has to do with behavior. And like Dr. Crosby, you probably know this better than anybody in your world of psychology, but women tend to be more empathetic and more rational. We don't oftentimes make impulsive decisions. And like you said, we do more research. So with all of that, I think we also tend to move a little bit slower when it comes to making decisions. So I think women just have this patience and discipline factor, and it really works in our favor because time in the stock market is a lot more meaningful than trying to time the stock market. And what I mean by that is investing in a well-diversified investment portfolio and keeping it invested for a long period of time has really been shown to be more profitable than trading in and out of stocks, kind of like the typical behavioral investor tends to want to do.
Yeah.
And then I think to your point too, like on the flip side of that coin, some of those same characteristics that women have will cause them to avoid risk and stay out of the stock market. It's almost like a paralysis by analysis situation where there just isn't enough knowledge there to assure themselves that they are making confident decisions when it comes to investing. So there's that flip side. I think that flip side of the coin is really a whole other tangent and rabbit hole we could go down.
Yeah, well, let's go down it for a moment. My first job when I graduated with my PhD was assessing bankers before they were hired. So I would give them IQ tests and personality tests and all this stuff to determine if they were a good fit for an organization. Well, one of the things that I found very consistently is that a strength that gets sort of overextended is indistinguishable from a weakness, right? So if you have this strength of being analytically minded and conservative and rational, even as good as all those things are, if it's overextended or taken too far, I think it can become problematic. And that, that's true of things that are unique to men and women. Another thing that's tricky is as Kelly so rudely pointed out to me, that men have a bad tendency of dying. It's all love, Kelly. I'm just joking with you. But yeah, that's true that men don't live as long. And so women need to maintain a risk balance, a risk appetite over their lifetime to account for the fact that they tend to live, a much longer time. So it's good to think about these things. Even these strengths can be overextended and taken too far. So Kelly, next question goes to you. It's a little tricky because the research shows two things. The research shows that women outperform men in just about every conceivable investment context. But then the research also shows that in spite of all of this success, women are not given their due by some within the industry. So a majority of women that are surveyed report having been the victim of negative stereotypes about their ability to handle money. In a famous study that asked whether they thought men or women would outperform as money managers, more than 90% of respondents said that they thought men would outperform women in a money management context. So we've got this weird paradox here that women tend to be better money managers and financial advisors than men on average, but that men are perceived as being better with money. So how can we as an industry begin to reshape those perceptions and begin to set forth what the research is telling us fairly plainly?
Sure. I think this question really hits me in a very real way. So just to give you a little bit of background, when I came out of college, I was in an accelerated investment program, and the class was 10 people, and I was only one of 3 women. And I remember none of the men, and sometimes even the teachers and professors that we had to a certain extent, would really speak down to the women. And so I completely understand that there is this attitude that women just cannot be in finance or will not perform as well in finance. And so we had a training for about 3 months. And I remember we also took a fair amount of tests during that time. It was really preparing us for the Charter Financial Analyst designation exams. And I was told by the head person that I actually scored second in the class. So that to me at that time gave me a lot of relief, because I just felt like I spent most of the training time with people speaking down to me. And it did give me confidence. And I mean, that was also when I was 21. I do believe I have a lot more confidence now that's not affected by other people. But I completely agree that women are just not given a fair shot in general without any kind of background. So it would really be great for us as an industry to be able to really highlight these women investment managers, and let them be given a platform to really show like, hey, these are my returns. Whether this is at like conferences, events, industry journals, I think we would really do well by highlighting these women investment managers. In fact, for a lot of my investment portfolios, what I like to do with my clients is that I act as a manager of different investment managers. And what I like to do is find the best managers in different asset classes. And I really enjoy using this women-led investment manager for large cap returns. And her returns have just incredibly outperformed the market, especially in the last year, but also over the last 10 years at inception. So yeah, as an industry, we really do need to give women a platform to really highlight their performance.
Well, I think one thing that's fascinating, I'll dovetail off of what you talked about, the fund manager that you like to work with. I would say that the most notable and the most successful investor of the last couple of years has been Cathie Wood of ARK. It's interesting that when people talk about someone who's been generating eye-popping returns of late, someone who is truly innovative in her approach, it's not Warren Buffett, it's not Peter Lynch, it's not these people that I think have historically been sort of on the Mount Everest of great investors. It's telling to me that I think when you ask most people who's the greatest living investor today, I think most people would point to her. And so hopefully having such a visible example will give rise to the very same thing that you're talking about, which is, other talented managers, being viewed through a more impartial lens. So the next question I want to ask is a little bit tricky, because there's a much discussed confidence gap with respect to women in money. Okay, so when we know that if we zoom out and look at women as a whole versus men as a whole in their self-perceptions of how confident they are, men perceive themselves as being more confident and competent with respect to managing money, despite the facts suggesting otherwise. But there's also, when you drill in on that information a little bit, you see that this confidence gap tends to evaporate. It tends to dissipate when you look at younger women and you look at women who make 6 figures. So the confidence gap is there in aggregate, but it's disappearing in pockets among the well-compensated and among the younger generations. So I guess my first question is, how can we increase women's self-perceptions of their confidence, right? How can we narrow this confidence gap? And then the second question from the behavioral guy in me is, how can we narrow this confidence gap without leading women to make the same sort of overconfident bets that men sometimes do that lead them down a bad path? Because, back to our conversation of too much of a good thing, confidence is excellent. Overconfidence can be catastrophic. So how do we narrow the confidence gap? And then how do we make sure that it's not so fully done away with that women lose their edge? So that's a toss-up. Whoever would like it, or both of you can take it.
Okay.
Yeah, I'll jump in first. I think that confidence gap that you're speaking about is really important to understand. And like I said earlier, I think it's really the lack of confidence that tends to keep women out of the stock market and keep them away from investing. And for many women, money really is a leading cause of stress and worry. But it's things like taking action, saving more money, investing, getting in and getting your experience really can be that number one driver of our confidence and being able to achieve those future goals. So I think there are really a few things that stem from this confidence gap. And for one, we're all very aware of the pay gap, the gender pay gap. It's been a generational issue for a long time. But I think that's really just the tip of the iceberg. When we talk about getting more money in the hands of women, we tend to center this discussion around asking for a promotion and getting the raise, which, don't get me wrong, I'm all for. But I truly think it's more of the gender wealth gap that's much worse, which is how much money is actually being kept by women opposed to how much we're getting paid. So women don't only earn less than men, we invest less than men, and not even a total of investments as a percentage of our net worth. So what I really think it comes down to is there's power in knowledge. I really think it's going to be getting more knowledge and getting education that's really going to be the driving forces in being able to close that confidence gap.
Yeah, thank you.
Yeah, I would love to chime in, and I agree with that. I think education is so key. And I've had so many meetings with women and men, and at our firm, we go through a very comprehensive process. And what we do is we like to organize our clients' assets and balance sheet onto what we call the living balance sheet. And when people go through this process and see all of their assets on one page, all of their liabilities on one page, what's their protection, what does their cash flow look like, sometimes it's just really, really obvious what needs to be done, even to them. And so I just love it when their eyes light up and like, oh, wow, I didn't think about that. Thank you so much for teaching me this. So yes, I really do think education is so important and will really lead to the ability for women to be a lot more confident in investing.
Yeah. So I have 3 things that it's sort of a 3-part process for behavior change that I think applies here as well. Now that you both speak about this, it's 3 E's. The first E is education, right? We need to know the right thing to do. To Lynsey's point, we have to get our hands dirty with it a little bit and get in there and learn the right things and get involved in the process. I think the second thing is environment. You have to see it to be it. You have to, surround yourself with other people and other women who are making the right moves, who are investing, who are asking for the raise, who are taking control of their finances. And then I think the third thing is encouragement. Even if we know what to do, even if we're surrounded with good people, our confidence is going to flag at times, and we need people in our corner to encourage us to do the right thing. So hopefully, if we can get those 3 things moving, we start to narrow that confidence gap. Do either of you worry that women ever become so empowered that 50 years from now, the confidence gap is so narrowed that men and women have absolute parity in that respect, and then that women are making the same sort of boneheaded decisions men make with money? Or do you think that that's not the way that women are wired?
I think it's kind of a combination. I think you're right. Women aren't necessarily wired that way, but I think in really any sense, this overconfidence will lead to impulsive decisions. So just being able to dial that back and continue to get educated and empower yourself with knowledge, I think will help with that. And women do a little bit better job of.
Yeah. I mean, I think you're just going to get all types of people. So yes, there will be the people that are overconfident, let's say, and then make some rash decisions. And then you're going to have the people that are fine. And they're like, okay, I'm confident and I know what I'm doing. And they're not to the extreme of being overconfident and making bad decisions. So, I mean, Lynsey and I both really believe in working with a professional. Mm-hmm. I came from the institutional portfolio management side of the business, working in corporate finance. And I used to think that I knew all there was about personal finances. And until I came into this industry, I realized, wow, there's so much I didn't know and didn't think about. So I strongly believe in working with someone who has that comprehensive view and comprehensive philosophy to managing finances.
Yeah, absolutely. So speaking of that, how can we as an industry meet the unique needs of women? Because women do have, unique needs. They live longer. They tend to outlive their spouses pretty handily. They do, as Lynsey's mentioned, on average make about three quarters about 76% as much money as their male counterparts. So we have all these sort of unique disposition, these unique risk factors. So how can we as an industry meet the unique needs of women, both welcoming women into the industry? Because, Kelly, your class is pretty indicative, right? It's the industry as a whole is about 70-30 men, as your class was. So how can we meet the unique needs of women, both as folks working in finance and also as our clients? How can we be more woman-centric in our approaches, both internally and externally?
Yeah, I think, keeping in mind that client focus, I think what's really unfortunate is that the message that our society tends to send women and girls around money can actually be quite damaging. I think the advice that comes from the media that's geared towards men is all about growing money and trading and picking the winners. It's a lot of the fun stuff, but there's no real sound advice in the media that's geared towards women. Most advice that's out there, articles that are written for women about money, can be overwhelmingly negative or patronizing. It's things like, don't buy the latte or don't go shopping, you're overspending. And I think these things can also be very guilt-inducing. So although we do have unique perspectives about money, I don't think that necessarily means that foundational financial advice needs to sound any differently between men and women.
Well, Lynsey, I want to run with that for a minute. When you look at how men and women interact with money at a national level, and again, we're full of sort of high-level research. Your mileage may vary, your situation may be different, and that's fine. But when you look at the 30,000-foot level, men on average are more involved in managing a family's investments, and women on average are more involved with kind of the day-to-day, the checkbook, if you will, sort of the paying of bills and the managing of monthly cash flows. But the men are making the decisions about how that money gets allocated, how retirement gets prepared for, some of those, those higher level decisions with bigger pools of money. So I think what you're talking about is exactly the right thing. We need to break the shackles of these stereotypes and let women know that they belong in the conversation, every bit as much as men, and that it's not just about, budgeting the sort of daily ins and outs of life. It's about making longer term decisions about risk management and preparation and protection and all of these things, because it's a little siloed. Like when we look at the research, it's a little siloed. And we need to cross over, I think, and each be involved more on the other side. So as we begin to close, if you could just have one suggestion, each of you just take one or two suggestions, that things that we as an industry can do to start to move towards greater gender parity and more equality. What are some practical things, if people are listening today, they've been moved by your words, they want to make a difference, what can they do today to start?
I can comment on that, and it really kind of pairs well with the question that you had before, and the industry meeting the needs of women on the advisor side. What I wish we would do better is just even market our industry better as a potential career option for women. Again, coming from the corporate finance world, I thought financial advising was only the financial advisor of the bank. And I saw just what they would do, and I would say it's a silo of what comprehensive financial advisors do. But there's so many things about our industry and our career that would really be so appealing to women. You can create your own destiny. You can determine your salary. The pay scale is even. I would say the playing field is even. There's a flexibility of schedule, and yeah, even though with my own experience, also with the prior corporate finance world, that being predominantly male, and even in our financial advisory business being still predominantly male, I've really had a very different experience with WestPac, where the men at our firm genuinely really want to help the women grow and be better and get better. So I applaud the men in our firm, and I hope that more men out there can really help and support and educate, mentor, and bring women up through the ranks.
Yeah. Thank you. I think, I'm seeing slow but sure changes in the industry. And I think that we're all better together. And I think you're starting to see more people who realize that and are starting to make those changes. So last question, I'll give it to each of you. Got to tell me a book or an idea that changed your life.
I have a great book that comes to mind that I read a few years ago. It's called The Myth of the Nice Girl by Fran Hauser. And really what I love about the book is that she deconstructs this negative perception of niceness that I think a lot of women in the business world struggle with. If women are nice, they are seen as weak and ineffective. But if they are tough, they're labeled as cynical or miserable or maybe even worse. Mm-hmm. So, and one of the quotes in her book is, the more successful a man is, the more likable he becomes. But with a woman, it's exact opposite. The more successful and ambitious a woman is, the less likable she becomes. So the book really proves that women don't have to necessarily sacrifice their values or hide their authentic personalities to be successful and to be a well-respected leader. So the book has changed me because I've really been able to lean on that concept a lot as I've been on my own leadership and management path.
Oh, it's fantastic. Thank you, Lynsey. Well, how about you, Kelly? A book or idea that changed your life?
Sure. For me, it's an idea. I used to think that work and your purpose, mission, helping others were completely separate things. And you did really one so that you could do the other. And now I really, really fully believe in the convergence of work and purpose and helping others. I mean, what we do as an industry, we have the ability to change the path of people's lives, and for the better if we do our jobs right. And so what I really feel like our purpose is to lift the weight off of people's shoulders, prepare them, whether it's good or bad things that might happen to them unexpectedly in their life, and help them really make wise financial decisions. And so that they can really spend that additional time by not worrying about finances because they know they're set, and feed into their family, friends, and community.
Well, as long as the American Psychological Association has been measuring it since the 70s, every single year, money problems are the biggest problems that people and families have. It's the number one stressor that people have. So insofar as we as an industry can help take that burden off of people's shoulders and help them sleep better at night, we really are doing a great deal of good. So Kelly, Lynsey, thank you both so much. If people want to learn more about you or more about your firm, where can they go?
You can go to westpacwealthpartners.com. We're happy to also share our emails, Kelly, Kelly .eng@westpacwealth.com, and Lynsey's at
Lynsey.freeman@westpacwealth.com.
All right. Thank you both so much. You were incredible guests. I really appreciate it.
Thank you so much.
All opinions expressed by Dr. Daniel Crosby and podcast guests are solely their own opinions and do not reflect the opinion of or endorsement by the Guardian Life Insurance Company of America, Guardian, and its affiliates, subsidiaries, employees, and agents, including Park Avenue Securities and the Guardian Network. This podcast is for informational purposes only and should not be relied upon as a basis for legal, tax, and investment decisions. The opinions are based upon information participants consider reliable, and Dr. Crosby and Guardian are not responsible for the consequences of any decisions or actions taken because of the information provided. Guardian copyright is a registered trademark of the Guardian Life Insurance Company of America. All materials are subject to United States copyright laws. Copyright 2020 Guardian. Kelly Ng and Lynsey Freeman are registered representatives and financial advisors of Park Avenue Securities, LLC, PAS. OSJ 4275 Executive Square, number 800 La Jolla, California 92037 619-684-6400. Securities products and advisory services offered through PAS member FINRA SIPC. Financial representatives of the Guardian Life Insurance Company of America. Copyright Guardian. New York, New York. PAS is a wholly owned subsidiary of Guardian. WestPac Wealth Partners, LLC is not an affiliate or subsidiary of PAS or Guardian. Kelly's CA insurance license number 0M18376. Lynsey's California insurance license number 0K29254. This podcast is for informational purposes only. Guest speakers and their firms are not affiliated with or endorsed by PAS, Guardian, or WestPac Wealth Partners, and opinions stated are their own. 2020-112942, expiration 10/2022.